All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Market off to a slightly higher start here this morning as we saw global markets boosted. China specifically, nice little rebound in China as they talked about buying some of the some of the cheap oil around the world to pump into their strategic reserves, and as some of the coronavirus data comes out, which you could take for whatever you want to take that as. But we did see a boost in those markets last night, and if we pull up FXI here, which is the Chinese ETF, you can see it not erasing yesterday's loss, but back pretty much to where it was at this time yesterday morning. And so not really going anywhere. It's kind of been stuck in this area for a few days, almost a week now. And, typical of a lot of charts that we see out there right now, here in the market. There are quite a few crossovers on the challenge watch list this morning. EOG, FXI are the two on the upside. Starbucks was on it this morning. There were a few others on it this morning, but they've come off here over the last little bit. And then on the bearish crossover side, we see a couple, Chipotle, CSX, and the SPY. This list was a lot bigger at the open, but it's been shrinking here. None of these are qualifying as signals as they sit yet. I'm very interested in CSX. I thought it was going to trigger yesterday, and it didn't. Be very curious to see if it triggers here today. Chipotle, you know where I stand with Chipotle. This is a stock, I think, when this all kind of plays itself out, that we could see move significantly higher. That said, I would not be surprised to see one more down leg come in here to it before that all happens. Starbucks this morning got a really big pop as one of their competitors in China basically tanked last night as it was announced that they might have fudged some of their earnings numbers and may have to go back and restate what their numbers really are, which, if you follow Chinese companies since they've become part of the global market, it's nothing new. We have seen this time and time again, and there's a lot of talk that a lot of the numbers just aren't correct and things like that, and to each their own with that. But we do see this, from time to time. Is that a reason to go buy Starbucks? Well, I personally don't think so. I do think it's pretty interesting what Starbucks is doing during this time, in helping their employees out and things like that. But overall, still kind of like Chipotle here. Could there be another down leg? Yeah, probably. And would that be the time to buy it? Yeah, probably. But we haven't seen them go dirt cheap yet. We just have seen them go cheaper, but we have not seen a lot of stocks go dirt cheap, out there right now. So some crossover action that could turn into signals here later on today. We'll see how it pans out. We did see a FedEx put signal yesterday, and I couldn't get in. I talked about it on video. Just the options, just not good enough. And not a really good risk reward scenario. But I did talk that if the options compress a little bit, that I would look to go ahead and get in, here to it. And the options have compressed by a little bit more than $1, which is nice to see. Some of it because the stock is up 40 cents, but a lot of it is a couple point tick down in implied volatility, and dinging those options. And we're going to see a lot of that here today, with the market up, with stocks just generally up. Things like Disney, they're going to lose a lot of implied volatility on them here today. And as I'm talking, we are seeing some market movement. Okay, nothing too fancy, but you can see last night S&P futures were up. We're trading on higher, kind of not quite to the highs of yesterday morning, but getting close. And then we saw them crater here and have a move down of 2,500 down to 24 24. So about 75-point drop here. And this happened on the jobless claims numbers, which were historically high. But that news has been ultimately bought up, which is the second week in a row where we have seen that news bought up. And let me show you what it looks like here, just from a chart perspective. But, this is one where the data, we know it's going to be ugly. It is just one of those, it's going to be ugly. And take a look, since 1960, jobless claims numbers had never been at 3 million like they were last week, and then this week came in over 6 million. If we just put that on a 10-year chart, or let's just go to 1 year, you can kind of see what that looks like. It's just it's pretty massive in every way. No matter how we put it up, no matter how we display it. It is such an outlier in terms of, what we have seen historically, that it's pretty amazing. And, not exactly fun times for a lot of people. And, something that I think most of us have people in our lives that are being impacted. And if not ourselves being impacted, but it's something that is a reality of the situation right now. But how is the market reacting to data? So far the bad news has been bought up when it comes to economic data. And so we'll see, how that carries on, but no real change in metrics or things like that here so far this morning. We could see the market vibe snap back to neutral here today if the move holds, but long way to go for that. All right. Now I want to talk about option pricing, because it's one of the things that when Michelle forwards me over some things that the questions that come in, it seems to be a common theme, and it's about option movement in this market. Because from a challenge perspective, it's been, yes, we've had a lack of signals, and a lack of signals is intentionally designed, in a historic market. And, just something that we're not going to see a lot of crossovers, and we haven't. And now that we have the crossovers, they're coming from, super lows. So that first bounce isn't going to, be a good spot there. And then as we do have signals, do have to be careful that the option values fit within the challenge parameters. And if they don't fit within the challenge parameters, then can't really trade them. And some have commented that, options just might not be tradable at all right now. What gives, what's up, blah, blah, blah. And we've talked a little bit about it, but I wanted to give some examples here this morning, because options are tradable. There are options out there in this market that move, and that move to a significant degree, and that can be traded. And I'm not sitting on my hands, not trading, personally. Personally, I got to get in. I got to have a little fun, here from a trade perspective. Even though from a challenge perspective, I've had to be very, on my hands, just because the options do not fit in with, what the challenge is and what the challenge risk-reward parameters are. So wanted to go out and take a look at some examples, and let's start with I want to show a live trade. This is the challenge account. This isn't my main personal account that I do most of my trading out of, but the other day I did go and I threw a trade into this account just so that I could show it, whether it made money or not. I could just show it here, because I can't pull up my personal account on video for legal reasons. But the challenge account, there's a live account, there's a live trade, and it's not anything dramatic, but I want to show you the option movement. And I just threw 4 contracts into this and went. And this is something that entered on 3/31. Okay, 3/31 at about an hour before the market closed. So you can see the time right down here, 3/31, 13:01, 54 in 54 seconds. And I bought some Bank of America April or 3rd of April 22 puts. All right. And I picked them up for 93 cents. All right. What did this look like? Well, let's go take a look. Here's the chart on Bank of America. Maybe the chart on Bank of America. Perhaps. There we go. All right. But here's Bank of America on Friday, or excuse me, on Tuesday. And we can see Bank of America, was up in the morning and then started to weaken. And I got off video and I took a look at Bank of America. And it was breaking the day's lows. And that is something that, I wanted to see. We saw a lot of other stocks doing it. So I said, all right, I'll go throw some in there. This wasn't hyper-analyzed. This wasn't something with indicators. It wasn't something with, some great insight or knowledge that I had about what's going on or anything like that. No, it broke the day's lows. I said, okay, gives me a chance. I'll go see what happens. So I got into the puts. Yesterday morning, I got out of the puts. And you can see the exit time. This is 3.5 minutes after the market opened. I pulled these puts off, and at 224. Notice the option value. It moved pretty good, right? From just 93 to 224, we'd say, that's pretty good movement, right? But notice the option I had to buy. The 3rd of April. This is this Friday's option, the 22 strike. Got almost a 6% drop in the stock. And the option just did a little bit more than doubled. 6% drop in the stock, and the option did a little more than doubling on a weekly option that expires tomorrow. This option in most markets be a 500, 600, 700%. This was a little more than a double. So did the option move? Yeah, you betcha it moved, right? We know it moved. It moved, and there are options that are moving. But to get the movement in the option, you pretty much need to be short term, and you pretty much need to get a massive move and be right away. Let's go take a look at how this option is traded. All right, since and before and since, and let's come into it here. It's the 22 strike, and we can't do this with all options because they're not actively traded. But here's the option chart. Is there movement in it? Well, on Friday, this put option was worth $1.70. Right, came all the way down to 43 cents on Tuesday. When I picked it up at 93 cents on Tuesday, it was Tuesday afternoon. Then yesterday morning, it jumped up here. You can see the $2 area where I got out. Then this morning, it was yesterday at the close, it was a little higher, and now it's down to $1.40. So there is movement, but it's fast-paced. It's movement that you have to be right in a big way, and if the stock flattens out, what's going to happen to the options? The options are going to get clobbered, and we see it on the upside, we see it on the downside. Okay, great. Weekly options are moving. Yep, they're giving some movement, right? We can go across the board. We can take a look at something like a Micron, and here's the 41. Let's go to the 40 strike since it's the most actively traded, and we could chart and we could see that the options are moving. Here are the calls on Micron. They were $6 last week, or earlier this week, and late last week they came down to $2 here on Wednesday, down to 75 cents yesterday, and up to $1.50 today. Right, so there's some movement here. There is some option movement that is happening. But keep in mind which options these are. And what's going to happen to these option values if the stock goes flat? So if today we were to go out and we were to buy the 41.50 calls on Micron, Micron would have to rally to 42.10, 42.20 in order to break even. Could it do it? Yeah, it could do it in a heartbeat. But anything lower than that is a complete loss. So basically, you have a day and a half. You better be right. You better be right big, because the stock can go up and you can still lose money on your options. That's nothing different than any other time period, but the magnitude of move required is significantly greater than what it's been. So your reward potential is not going to be nearly as high, and your risk is going to be significantly greater. Okay, when it comes to the options. Now, that's on the weekly options. That's on the super short-term options, that are out there and going on. And I have to pause here. Here's oil. This is what's driving. That's a massive move. Oil has jumped from, oil broke 20 this week, and it's now at 26. Coming on the heels of Goldman Sachs basically saying, a rally in oil is not sustainable, talking about the rally this morning. But here we see oil continuing to climb. I'm trying to pull up my news feed. I didn't have that on here. But some of the oil names are being halted. So it's one where, the news is that President Trump spoke to Vladimir Putin, who is the Russian president, dictator, whatever you want to call him, and basically said that he expects Russia to cut oil production by 10 million barrels or more in order to kind of get in line with Saudi Arabia and to reverse some of the mayhem that we have seen in the energy market. So here's the price of West Texas crude, and you say, well, the whole coronavirus stuff, sure, but this big move here, basically from the 50s all the way down, has been as Russia decided they weren't going to cut production along with Saudi Arabia and OPEC, and kind of broke some of the truce that they had for a long time. And so Saudi Arabia went after them. Saudi Arabia went after and said, we're going to increase production in all of the Russian markets, the markets that Russia competes in, and Saudi Arabia lowered the pricing, and Russia is bankrupt basically with oil at 20. Russia desperately needs oil higher, and so to see oil getting this jump here as Russia supposedly says they're going to cut. We'll see. We'll see ultimately what happens, but that is creating that massive move in oil, which you can see no real price stability so far. 27.5. It's now at 25.35. So there's not going to be a lot of price stability. It's going to be pretty wild here, because nobody knows really what do you value oil at right now. What's the value of oil? You put it into your macro models with the global economy. You put in some of the risk when it comes to Russia and the Saudis. You put in some of the Iranian risk. What's oil worth? And the reality is, market can't really figure it out. They don't know what it's worth. Just listen to what Goldman Sachs said this morning. Even Goldman, they don't know what to value it at, and so it's creating some nice squeeze in some of the stocks out there. But most of these, it looks like they've been halted for a bit. But the Halliburton, the Oxys, I mentioned in my note this morning, the Exxons and Chevrons going to be meeting with President Trump here tomorrow, to see about, I don't want to use the word bailout, but there's not really much of a better word there than bailout for the industry. So anyway, sidebar, that's going on right now. Okay, so we see that now. Short-term options, and it looks like oil's been halted. Yeah, it looks like it's been halted here. Yep, it's been, let's see. Let me double check here. Yeah, it's been halted. That you don't see that very often. In fact, almost never do you see oil halted. That's another historic historic part of this market, which yeah, there it goes again. So it might be my feed that is a little delayed here. Maybe it wasn't halted, but sure looked it. Yeah, and it's missing a minute down here. So, yeah, it was halted for a brief moment there. But anyway, so we've talked about short-term options and they're moving, but in the Bank of America example, needed the stock to drop $6 on an at-the-money weekly put that, or 6% on an at-the-money weekly put that, just did a little more than double. In normally a 6% move, you'd be getting 600, 700, 800% there. But what does that mean for longer term options? Well, let's come take a look at some. Let's just come take a look at Apple, right? Apple's, heavily traded. Let's come in here to the 240 strike and just take a look at what's been going on there. Okay, and these are a little longer term here. Let's come to a 5 minutes so we can get the entire week here. Friday, this goes back. This is basically a 1 week chart of the options. Okay, the option had a high of 32 and a low of 18. So it's moving, right? It's moving. But let's say you picked up Apple yesterday. You grabbed Apple at the close yesterday, and it was $20.60 was the last traded option price here. You wake up today, the market's up 45 points. Apple's moving higher, it's up $1. And your option hasn't moved. In fact, much of the morning, Apple, it was lower. But your option, are you making any money? No. Flat is going to be a big burner. It's not going to be as big of a burner as it was on the shorter term options. But what do you need to make money here? This option that we're looking at is the 240. And it's going for $20. So that means that Apple needs to go to what? It needs to go to 260 to break even. 260 is my break even mark here for Apple. It's right up here. What's my double point for Apple? My double is 280. So I need the stock to go up 20% to double my money. What? I need these are options. I only have 40 days, and I need the stock to go up by almost 20%. A little less than 20%, 17% to double my money. If Apple decides to drift up to 245, 250, 255 over the next 3 weeks, just kind of hangs out in this area for a little while, my $20 option's going to 10, even though the stock's going up, because the implied volatility will come out. Doesn't mean that's going to happen, but that's one of the risk factors that I have to, counter, that I have to realize is there. I could get a $15 rally and lose money. I could see the stock go up 5%, 6%, and lose money. So now I have a loss on a small rally. I have a loss on anything down. I have a loss on flat. The only gain scenario is a big move up. And even then, massive big move gain up. What's my reward potential? So I have a lot more losing scenarios than I used to have. And my reward for a massive move, if I'm right, has been slashed. That's what happens when implied volatility jumps. You lose the reward potential at those massive moves, but you need those massive moves to make money. Now, Yes, it is very true. There are more massive moves in the market right now. Right? I talk about Bank of America. Yeah, it needed it to drop 6% to do what it did. Sure. But Bank of America dropping 6%, rallying 6%, it's happening a little more often right now. Sure is. But if we go take a look at the longer term options, the ones that, we could play for the challenge, let's come take a look at it. Let's go to the same options, the 22 puts. I've done this for a challenge trade, for instance. These same options. Okay, where are they? Well, the entry was Tuesday afternoon. All right, and the put option was 205 at about that same time. Somewhere in the 205, 210 area, somewhere in there. It doesn't look like a trade happened, so it's probably somewhere in that 210 area, which was a realistic fill. 210. Yesterday, did the option go up? Yeah, it did. It went up to 310. 6% drop for 50%. 50% move on the option. Hold it for just a little bit longer. Have some patience with the ATR method, 3 days worth of patience. Well, right now it's sitting at 280. So we're in at 210. It's currently going for 280. All right, we're up 20%. Great. Is that worth the risk? So the reality is, yes, options are moving. They are playable. But the risk-reward parameters have changed, and they've changed pretty dramatically. To get what you get to get the reward potential that we used to have on a 40 to 50-day option, you need to buy a 2 to 3 day option. And you get all the same risk potential. So the reward lower, risk higher because you're, in the shorter term options. And, does that keep me out? No, it doesn't keep me out. In fact, I'm eyeballing these Bank of America options as they rally, right? And going, all right, do I get a chance to jump into some here? Right? I mean, here we go. Here the 20 strike for this week. It's 25 cents. 25 cents here. Interesting. Okay. Well, let's go. Let me go do it. I'm going to put a little bit of money here. Let's see here. Let's go with I'll just do 10 contracts, right? I'll just do 10 contracts here, and I'll put on a market order. I'm not advising anybody to make this trade, but I just put $250 there on those Bank of America puts. All right, what needs to happen? Well, what's my break even? My break even is 1975. So by tomorrow, at the close, if Bank of America is above 1975, I lose money. If it's above 20, I lose all my money. So I need the stock to break below 20 to make money. I don't have much time, do I? Better happen pretty fast. Now, if I wake up and Bank of America's at 18, my 25-cent option will be worth $2. Okay, great. That'd be nice. That'd feel good. But I better be right, and I better be right away for that to happen. And can I expect that to happen consistently? No, I can't. I simply can't. Had I gone and bought these yesterday, right? Had I gone and bought these yesterday, let's take a look at the price of these options. Yesterday, they were going for upwards of $1. At the close, they were 90 cents. What's the difference in the chart today versus yesterday? Not a heck of a whole lot. But man, I bought them yesterday at 90 cents. How am I feeling today? At 20 cents. Not very good. Now I better have a massive drop or else I'm done. So yes, options are moving. They're absolutely moving. Are they moving with the risk-reward parameters that the challenge is about? No. They're not moving with the risk-reward parameters that specifically the algorithm for the challenge is about. and it is something that I'll continue to be patient. I'll continue to wait for that, for that risk reward to come in. I'm willing to stretch it a little bit, right? I don't need options to return to what they were. I'm willing to stretch it a little bit. We can still get some decent risk reward. The average true ranges are a little bit higher and all that, yada, yada, yada. Great. But it better be something at least where there's some reward potential for being right. And 50 to 60% reward potential with 100% risk potential, not exactly a solid risk reward scenario that I will jump into there for the challenge. So hopefully that kind of gives you a little more insight into, how these options are moving, what's kind of going on with them, and in the shorter term, in the longer term, and then if we go out even longer than what we've looked at here today, the scenario changes even more. But I won't drone on here about that. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.